Namaskar and good morning. Today we'll discuss about Infosys Limited, the IT bellwether company actively competing with Tata Consultancy Services but remaining at the number 2 slot for quite some time now. Now about Infosys, Salil Parekh is the CEO and MD. Praveen Rao is the Chief Operating Officer. Nilanjan Roy is the Chief Financial Officer. They are also board members. Infosys is a global leader in next generation digital services and consulting. Its teams are in over 46 countries. It enables the enterprises with an artificial intelligence powered core. One of the specialists in artificial intelligence. It also empowers businesses with agile digital technologies at a scale to deliver unprecedented levels of performance and customer delight. So its staff, its officers are always on learning agenda, continuous improvement through building and transferring digital skills, expertise, and ideas from its innovation ecosystem. It has built an innovation ecosystem within Infosys. Now, Salil Parekh, the CEO and MD, says our performance was robust on multiple dimensions. Revenue growth, great. Digital growth, great. Operating margins, operating efficiencies, large digital signings, and reduction in attrition. All these are clear signs that we are progressing very well in our journey of client centricity and maximizing value for our stakeholders. So, current quarter has been reasonably good. Now, let us see how it has fared in Q2. Revenues are 22,629 crores compared to 20,609 crores in Q2 of last year. Now, if you look at half yearly performance, revenues are 44,432 crores in the latest half year, H1 FY20, whereas the same was 39,737 crores in H1 of last year. I will repeat revenues again. 22,629 crores were there in the latest Q2. Compared to that, 2,000 crores less in Q2 of last year, 20,609 crores. Whereas in the first half year, that is Q1 plus Q2, 44,432 crores. Latest H1. Whereas last year H1, 39,737 crores. That's about 4,000 crores less. So, the latest quarter and latest half year have shown something like 2,000 crores in Q1 and 4,000 crores in H1 improvement. Now, cost of sales is 15,000 crores in Q2 latest, 13,000 crores in Q2 last year, 29,800 crores in H1 latest, 26,000 crores in H1 last year. So, gross profit is 7,550 crores in Q2 latest, 7,328 crores in Q2 last year, 14,574 crores in H1 latest, 14,168 crores in H1 last year. Now, operating profit is 4,912 crores in the latest Q2, 4,894 crores in Q2 last year, 9,383 crores in H1 latest, and 9,431 crores in H1 last year. So, in operating profit H1 only, there is a slight fall in the latest H1. Net profit again is reasonably good, 4,037 crores in Q2 latest, 4,110 crores in Q2 last year, 7,839 crores in H1 latest, 7,721 crores in H1 last year. Now, if you look at the earnings per equity share, I will read out the basic first. 9.46 rupees per face value of 5 rupees in Q2 latest. Whereas in Q2 last year, 9.45, 1 paise less. In H1 latest, 18.28 rupees. In H1 last year, 17.76 rupees last year. So, the benefit in earnings per share is not great. There is growth, but not great. The revenue growth is 9.8% year on year, whereas it is in constant currency if you talk, that is if you ignore the foreign exchange rates, etc. In dollar terms, it is 11.4% revenue growth is there. 3.8% revenue growth in quarter on quarter, that is sequential basis. 9.8% is year on year, 3.8% is quarter on quarter. And here in constant currency terms, it is 3.3%. See here, in respect of the IT companies, you will have to compare rupee terms as also constant currency, dollar terms. Operating profit is 4,912 crores, an increase of 0.4% year on year and 9.9% quarter on quarter. Operating margin, if you take, it is 21.7%, 1.2% improvement over Q1 previous quarter. It is within the margin guidance for the current year. Now, basic EPS is 9.46 we have seen on a face value of rupees 5. It is flat year on year and a growth of 7.1% quarter on quarter. Now, if you look at the price earning ratio, latest price is 788 and latest basic EPS is 9.46. That into 4 if you take annualize it. The approximately price earning ratio is 20.8. You can take half yearly EPS and double it, or take the latest quarter EPS and multiply by 4, whatever. But price earning ratio is around 420.8. Now, Q2 FY20 digital revenues is at $1,230 million, which is 38.3% of the total revenues. Year on year growth is 38.4% and sequential growth is 10.7% in now this is in dollar terms, in constant currency. If you look at the 52-week low and high, it is low is 600, high is 847. So low is 600.65, high is 847.7 and latest price is 788. The annual growth is nothing much, it is around 16.6%, not great. Now, revenues we have seen. Anyway, I will repeat 6 months ended September 30th. Revenues were 44,432 crores, a growth of 11.8% year on year, and in constant currency terms, it is 11.9%. Operating profit is 9,383 crores. Now we are reading for 6 monthly. So, operating profit, there is a decline of 0.5% year on year. Operating margin is 21.1%. It is within the margin guidance for the current year. Now, it has declared an interim dividend of rupees 8 per share. Rupees 8 per share of rupees 5. Now, it increased the lower end of the FY20 guidance slightly. So, the revised guidance is 9% to 10% in constant currency. Earlier, it was probably 8.5% to 10%. Now, that 8.5% has been upgraded to 9%. So, some buoyancy is seen. It is maintaining FY20 operating margin guidance range of 20% to 23%. Revenue guidance 9% to 10%. Operating margin guidance 21 to 23%. There is a double-digit growth for the fourth consecutive quarter, coupled with 1.2% operating margin expansion in Q2. Large deal signings are about $2.8 billion. Now, Praveen Rao says, Chief Operating Officer says, Q2 witnessed another quarter of all-round growth in industry segments and geographies, various industry segments and geographies, and it is a testimony to the credentials and client relevance of Infosys. Now, the large deal winnings, we are not talking about the small deal winnings, the large deal winnings are also very impressive at $2.8 billion. Praveen Rao says, we are especially pleased by the reduction in attrition given by our focus on enhanced employee value proposition. Now, Nilanjan Roy, CFO says, see, these are important for us to know what is the future. We saw expansion in operating margins. That's what Nilanjan Roy says. We saw expansion in operating margins during the quarter, driven by improvement in operational parameters and cost efficiencies. We have taken the first step towards implementation of our new capital allocation policy by increasing interim dividend by over 14% compared to FY19. Now, what about the capital allocation policy of Infosys? The company, Infosys, has completed a share buyback of 8,260 crores on 26th August 2019. With this, the company has completed the additional capital return program, that is a share buyback of up to 13,000 crores announced in April 2018. They had announced a share buyback of 13,000 crores. That was announced in April 2018. Now they have completed that on 26th August 2019. So the overall capital allocation policy now, the share buyback has been completed. They have also declared an interim dividend of over 14%. Increase the 8 rupees dividend. That is an increase by over 14% compared to FY19. So, will you invest in Infosys? You can invest if you want the value of your share not to go down in any circumstances. It's an IT bellwether company, and in its heyday, it can go up to 1,000, 1,100, etc. But in the recent past, it has been stagnating around 600, 700, etc. So that is how it is. A huge equity, but a huge revenue and huge profits also. Now, will it be a blockbuster, multi-bagger? We don't know. We can't say that. Large companies usually give steady returns, not multi-bagger returns. But for those who want steady returns, see, it has got attractive dividend returns also. Now, bonus also they are announcing periodically. So all these things are there. Infosys is a company which you can have. But it depends upon your portfolio approach. So this is Infosys. We will also cover TCS very soon. We will cover other companies also. You take your choice based upon the multi-bagger capabilities, or at least sizable progress capabilities of the companies. Infosys is winning large deals, $2.8 billion terms in one quarter. So that's quite sizable. Now, what will be its revenue implications, etc., in the coming quarters? That we'll have to wait and see. Anyway, Infosys is a great company, there is no doubt. Thank you for listening. I'll be back with you with another wonderful company. We'll see them.